All right, let's talk about credit utilization, what it is and what is some advice I can give you to help make sure that credit utilization won't impact your pre-approvals on any future loans that you want to apply for and won't affect your credit score in a negative way. So credit utilization is the difference or is the equation of your credit limits, how much you are pre-approved for, your credit limit of your credit cards. This is all for revolving accounts. And then how much you're utilizing currently, what your balance is, right? So you can easily do that by adding all your balances up and dividing them by the total credit limits that you have on all your revolving accounts, which are credit cards, and get that percentage and it'll tell you, okay? So very simple math. If you have one credit card and the credit limit on it's $100 and your balance is $500, that puts you at 50% utilization, which is high. Anything over 30% is considered excessive. I always like to keep my utilization at 1%, okay? Why 1%? Because if you pay your balances off every month, you may run the risk of account being closed because you're not using it and not leaving a balance on it. There's some myths behind that, but the reality is I don't want to run the risk of any creditor just out of the blue closing an account. So I always try to keep a small balance. Utilization, if you keep it at about 1%, is going to give you the best maximum score increase that you're allocated for. And so having a balance report every single month that's high is going to make your credit scores fluctuate as you pay them off and it's reported, your scores will go up. And then as you run your balances up and it's reported, your scores will go down. And so you have that fluctuation period. So just keeping the balances as low as possible at all times is always key advice that I can give you. Now, utilization, when it comes to getting pre-approved for loans, how does that affect you? Well, when you have high utilizations, these creditors or banks and lenders are looking at it as, wow, this person that has high utilization is probably living off their credit cards. You don't want that ever to be something that goes or crosses their mind. So keeping a low utilization percentage before you go get pre-approved will give you the best qualifying interest rates that you would receive. So I always recommend 30 days at least before you go and get pre-approved. Pay as many of your credit card balances down as low as you possibly can before submitting an application. It'll give you the best approval at the highest rates, and it won't allow the balances to affect your overall approval.